Terminal speed.
The labour market weakness we saw in the summer was a head fake.
What raises this question, basically, has the narrative been set?
We are still in the throes of a strong labour market.
The November jobs report, Friday on Bloomberg.
Take a look at the currency space after we saw the U.S. dollar seeing its first weekly loss in 9. This, of course, after incredible strength in the U.S. dollar and expectations of where the Fed goes from here. But we had a lot of volatility last week, especially with Treasury yields falling and new threats of tariffs on key trading partners coming from President-elect Donald Trump. So we had a lot of volatility in EM currencies, especially with the Mexican peso really slumping and rebounding all of last week. The offshore yuan also last week at one point touching a 4-month low against the U.S. dollar. Now we have President-elect Trump coming out again and threatening more repercussions for BRICS nations if they veer away from the U.S. dollar and create an alternative. They want a commitment from these BRICS nations to continue to use the U.S. dollar. We'll continue to see what the pressure and fallout we see in the Asian session when it comes to Asian currencies. But potentially we could see a little bit of support for the yuan. China's official PMI on Saturday showed gradual improvement in the economy after a broad stimulus package helped reverse months of contraction. Let's bring in our China correspondent. China's official PMI on Saturday showed gradual improvement in the economy after a broad stimulus package helped reverse months of contraction. Let's bring in our China correspondent. China's official PMI on Saturday showed gradual improvement in the economy after shorter work market as the golden market a little bit of spring get so you strip away that seasonal effect, you're actually seeing the November activity extending at a similarly gradual pace as the previous month. So the numbers came in at 50.3 up from 50.1 in October. And if you look at the non-manufacturing PMI, that fell to 50. That's the borderline between expansion and contraction. If you look at the construction sub-index, that contracted for the first time since February of 2020. The employment gauge as well deepened contraction, suggesting that factories are still quite unwilling to hire workers, and the input and output price gauges as well continuing to fall, suggesting that we still see this deflationary pressure going on. Services PMI was flat. So overall, you're seeing that recovery is still pretty fragile here as we wait for the stimulus to take hold in the economy.
And is that fragility expected perhaps to be more expressed in the private sector with the Caixin PMI that's due out later today?
No, in fact, the Caixin PMI, we're expecting quite a strong number. 50.6 is the consensus forecast. That's the strongest in about 5 months. That's largely going to be boosted by new export orders, because we already did see that export was surging to a new high since 2022 in October. This is because exporters are front-loading shipments ahead of the Christmas holiday, as well as to mitigate the impact of any potential Trump tariffs. So the expectation there is that the private index there is going to show a stronger reading, because the Caixin PMI tends to capture the smaller export-oriented firms rather than the state-owned enterprises.
Our China correspondent Min Lo there. Let's bring back Alicia Garcia Herrera, who's the chief Asia Pacific economist at Natixis CIB. Thanks for sticking along with us. And so we've been kind of trying to be patient when it comes to how these stimulus measures have started to kind of percolate through, particularly when it comes to some of these private companies, right? How sustainable do you think this sort of nascent rebound will be? And how does kind of the fiscal side potentially change if Beijing is looking at, needing kind of firepower for the next 4 years, depending on what President Trump does?
So I'll be blunt and brief. We're not expecting a rebound at Natixis. And why? Because stimulus is not a stimulus. It's a a restructuring package. It says, which is very welcome, by the way, because China has all of this hidden debt. Local governments are excessively indebted. This percolates into the economy, and any supplier from local governments is still waiting to be paid. So, all of this is welcome, but it's not really a stimulus package in the way we understand it, comparing it to 2008 in any form. So, we are going to have lower growth in 2025, maybe mitigating the deceleration, though, thanks to the package. So we're around probably 4.5 in 2025. So not real recovery, unless, and by the way, and this is still not counting on massive tariffs. So basically, if Trump behaves nicely, I would say a trade deal, but at least tariffs that are not too different for China, as we're seeing so far, given his announcement on China versus Mexico and Canada, we would see that type of growth. If, however, the party feels that they need more and they come with a big stimulus, this time around consumption-based stimulus, then that would be a different ballgame. But frankly, I think they would be very hesitant because the actual official debt in China will go up by 8 percentage points of GDP, only because of this 10 trillion RMB package only. So, the official debt is really going to increase. And I think they will be very careful to have a big bump in public debt with an additional consumption-based stimulus.
So what do you see as being, I guess, the sort of flow-on effects when it comes to China's trading partners, right? We've already seen this sort of flurry of front-loading effects, and we're seeing that from some companies that trade with China as well. Do you see that sort of level of, I guess, the green shoots that we have at the moment being sustained on that front as well?
So there's two types of green shoots. One is on the consumption side. In October, we had good numbers, but it was mostly the Golden Week. And the first 10 days of October were, stock market flurry, and everybody was, thinking it would last. It didn't last. So I think I'm expecting worse consumption numbers in November. PMI, I think, is very much driven by export orders, and these are coming because of tariffs, and therefore they're not sustainable. So I actually think China's growth next year will be hurt mostly because of a smaller contribution of external demand. And this is tariff related, not only the US. If you look at the number of countries so far, even Russia, latest news, the number of tariffs China will be confronted with next year will be humongous.
What will that mean for trading partners across Asia? Already last week, we were surprised to see the Bank of Korea actually cut rates. That was unexpected. We saw the RBNZ also cutting rates. It seems that the economic outlook across Asia might not look as encouraging in 2025.
Yes, exactly. And I think there is an important reason for this. We think substitution. Yeah, we think, okay, if China is hit by tariffs, somebody else will export to the US. But South Korea was already banking on that. This was the IRA. South Korea had kind of a special access to the US market, which China didn't, through basically access to subsidies. And that is very likely to be stopped by Trump. So the gain that we could have seen for South Korea is actually not going to be there. And then in general, the whole region is decelerating. India is decelerating. China, as I said, even with this stimulus, so-called stimulus, will be decelerating next year. So, it's just only natural to and by the way, the US economy still, no matter what Trump might do, we still hold the view that there will be a deceleration. Europe is not doing well. Why would you have an exuberant Asia? I can understand the feeling of many of the central banks that they want to cut. It's not logical. The problem is some might not be able to cut because their currencies may be too weak. And that is when we hit the wall for some EM Asia.
Yeah, I hear a lot of caution coming from you, Alicia. Good to have you with us, Alicia Garcia-Herrero, Chief Asia Pacific Economist at Natixis CIB. We do have more ahead on the Asia trade. This is Bloomberg.
I think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
DOJ or other authorities
could face bigger challenges next.
It was going to keep rain while coming. This is
As the economic picture.
covering the intersections of Hollywood.
We are taking a look at a couple of big movers when it comes to Australia in the mining space. That's De Grey Mining as well as Northern Star. Pretty different trajectories, as you can see. De Grey Mining up by almost 28% there. Northern Star is set to buy De Grey Mining in a $5 billion Aussie dollar gold deal. So the takeover will give Northern Star full ownership of the Hemi project, which is a low-cost gold asset located in WA. It's expected to produce 530,000 ounces of gold per year on average for the first 10 years. So this is really a move to secure more supply amid soaring prices of gold, particularly of late at the moment. And that increase of ore supply is key for Northern Star, which is Australia's biggest listed gold miner. We're seeing broad flatness across the ASX so far. This is Bloomberg.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
French Finance Minister Antoine Armand tells us exclusively the government will not accept artificial budget deadlines from far-right leader Marine Le Pen. That's after Le Pen gave her strongest indications yet that she'll topple the administration as soon as this week.
This government, in the last week, has clearly demonstrated its willingness to ensure that France could have a budget through evolution in the budget. And let me remind also that the parliamentary debate is still ongoing, and we have to wait until the end of this debate. But as you said, France is at a critical time. We have the arguments, we have the fundamentals. We have a perspective to reduce public spending and to cut borrowing, which is very important for France, but for Europe as well. So let's remind the political leaders in France that we have a common responsibility, and that this common responsibility includes voting, adopting, passing a budget.
Does that mean there's going to be more compromise, more concessions before Monday night, which is the deadline that Marine Le Pen has given you?
As I said, the French government doesn't take ultimatums. It's looking at the French parliamentary debate. It's respecting each and every parliamentary debate that leads to an evolution. We will take into account what is changing, but we won't be blackmailed. We are committed to reduce the deficit.
I understand you're willing to perhaps compromise, but Marine Le Pen has some specific concessions she wants from the government, including that all pensions be indexed on inflation as soon as January. And she also wants the government to give up this plan to abandon some drug reimbursement. On these two specific topics, is there any way to have more concessions from the government?
Let us not just focus on the Rassemblement National, because as you know...
but it's key.
It's key, but it's not enough. And as you say, for a vote of confidence to be adopted at the French Parliament, you would need to have the Socialist Party, the left parties, to vote with the far-right parties. So it would not only be the responsibility of Marine Le Pen's party, it would also be the responsibility of French socialists, French ecologists, people who are willing to oppose to Marine Le Pen, to vote together. It would be a very bad signal politically and economically for these countries, for our country, and for these parties who are saying and claiming that they could stay government parties.
Does that mean you're trying to negotiate with the Socialist Party, not the National Rally?
So we are not focused on with whom we negotiate or not. As I said, the government is a government of dialogue, of respect, of co-construction. This budget has been co-construction. It's not the result of just a government project. It's evolving within the days and the weeks of the parliamentary debate. Will still be open, but not to blackmail.
French Finance Minister Antoine Armand there speaking exclusively with Bloomberg's Caroline Conan. Some geopolitical stories that we're following this hour, and the Syrian military is pushing to rush back insurgents who have seized the city of Aleppo. According to AP, the airstrikes have hit the cities of Idlib and Aleppo, killing at least 25 people. Iran has pledged to help Damascus counter the offensive. Tehran is a key political and military ally of Syria and its long-running civil war. German Foreign Minister, Annalena Baerbock, is accusing China of providing Russia with weapons for its war against Ukraine and threatening European peace. She says she'll discuss this issue with her Chinese counterpart Wang Yi during her two-day visit to Beijing. Baerbock is also expected to discuss EU tariffs against Chinese EVs that were introduced in October, Sherry.
And Heidi, about 200 nations have failed to agree on how to curb plastic pollution after 2 years of divisive negotiations. A week-long UN-backed summit in Busan, South Korea, ended early Monday without a legally binding deal to regulate the production and use of plastics. Bloomberg's climate reporter Aaron Clark joins us now with more on this. And Aaron, we know that a majority of countries actually supported an agreement. So what happened?
Yeah, there's really widespread popular support among the public and also in the business community for a legally binding treaty that limits plastic pollution across the life cycle of plastic, which includes production, use, and disposal. There's a business coalition that includes multinationals like Coca-Cola, 3M, and Starbucks that were in favor of a legally binding treaty. And the majority of nations want that too. That was very clear during these negotiations. But what we found is that there was a very small minority of countries, of oil-producing countries, that really derailed these talks. And these are led primarily by Saudi Arabia. The concern is that if you begin to reduce plastic production, which is what the majority of countries want, then you could impact oil demand in the future, and a lot of oil companies and oil producing nations see plastic production as a growth area for oil, especially in the energy transition as we see a shift away from gasoline and diesel powered vehicles to EVs. So that was what happened. There was a vocal minority who really delayed derailed the talks, this round of talks, but there was a little bit of progress made. There was agreement at the end of these talks that there's sort of a new draft, a new proposal around which future talks will be based. So I think there was, an idea, a consensus that some progress had been made, but there's still quite a bit of difference between the majority of countries that want a legally binding treaty and this small group of oil-producing states.
And this failure in the negotiations seems particularly stark when there's so much new evidence and focus on microplastics and how this is seeping into ecosystems and communities, right? So, what potentially happens from here? Do we see kind of more progress when it comes to what individual countries and I guess bilateral groups perhaps are doing?
Yeah, and that's a great point. I mean, this is really about a public health concern. This is not about plastic, sort of plastic in whales' bellies. I mean, that's part of it, but it is a human public health concern because plastic production is forecast to increase about 60% by 2040. So you'll see an influx, even though some of that will be recycled, probably only about 10%, but you'll see a huge influx of a lot of that material, especially the single-use plastic, getting into natural ecosystems, whether that's terrestrial or marine-based systems. And we know that when that happens, the plastic breaks down into microplastics, it gets into food chains, and then it gets into humans. So there's tremendous concern and about the chemicals that are used in plastics and the health impacts. We know that they can impact things like IQ levels and obesity, cardiovascular disease, cancer.